Kalispera. Good kveld. Good evening. Okay, this is the last panel before the bar. Well, I think from an audience anticipation perspective, this is the only thing they anticipate more than the bar opening is Brian Devine's closing remarks. So we'll try to keep this on time. This is the ship owner's perspective panel. The theme this year, as you know, is clean energy in a changing world. But because this is the ship owner's perspective panel, we are not limited to that subject exclusively, and we will probably hit it up, but it won't be narrowly focused on that particular subject. The success of the panel, whether you find it interesting or not, depends a bit on you. If I'm not asking questions that you think are interesting, or they're not giving answers that you think are responsive, raise your hand at the end and ask your question. I guess we'll go quickly and dispense with the introductions. Probably the person who is least familiar to you is me. I'm the EVP and General Counsel of Southern Star Shipping, which is the New York offices of the John Kumanteros family. We represent Atlantic Bulk Carriers Management, operating out of Piraeus. It's a dry bulk company which has about 20 modern dry bulk vessels and charters in about 20 to 30 additional long-term vessels. I would like to briefly thank Mike Timpone and Nick Katsanos of Seward Kissel and George Perot of Jacques Perot and Jr. and Sons for helping me with this. Okay, on the panel we have Mark Filanowski, who is the CEO of Pangea Logistics Solutions, a public company headquartered in Newport, Rhode Island, where he's been on the board since 2014. They own, and again, these numbers are from their website, so hopefully they're updated, 24 dry bulk carriers, and daily operates a commercial fleet of approximately 60 dry bulk ships in worldwide trade. Mark has 35 years of shipping experience and has been an owner, operator, financer, and entrepreneur in the industry. Hamish Norton, president of Star Bulk Carriers Corp. Star Bulk is also publicly listed, as you know, global shipping company. They said 124 vessels, but I think that's pre-merger. It's probably more.
Right. It's fewer at the moment.
Fewer, okay.
It'll be more later.
Prior to Star Bulk, he was the MD and global head of Maritime Group at Jefferies. He has a long, illustrious, varied career, very interesting. I've heard it doesn't take a rocket scientist to run a shipping company, but Hamish has a PhD in physics. We have Mr. Fred Gordon, who's Senior Vice President of Corporate Affairs at Navios Corporation Management Inc. He's been at Navios since 2010, over 40 years of experience in shipping. We have Mr. Arthur Reagan-Art, who's the Director and CEO of Energos Infrastructure. Energos Infrastructure is an energy transition marine platform that owns and operates LNG floating storage and regasification units, floating storage vessel units, and LNG carriers. So we have a diverse panel here. And I should add that Arthur was also a long-term operating partner for Apollo Group and has been advising them since 2010. So I want to start kind of just generally with kind of the state of play for each of the individual companies, and I was going to start with Fred actually and talk about the recent consolidation under one public holding company of the various kind of pure play Navios ventures, and to get some thinking and context behind the move to consolidate under one publicly listed company and offer to the investor a diversity of shipping opportunities. Fred?
Thank you, Peter. I appreciate the opportunity to respond. First of all, I'd like to thank HACNAC for sponsoring it, and all of you for showing up this late in the day to hear a bunch of guys talk about ship owning. I also want to say that our thoughts and prayers are with the ship crews, particularly in Star Bulk, who were attacked just today, and all the people that are traveling on the seas that are doing the work for us. They are the reason we exist. And but to get to your question, Navios Maritime Partners is now one of the largest publicly listed ship owners. We have 180 ships. We have 16 vessel types. We address 10 different markets. We have sought this diversification for a couple main reasons. And we note that there's been a few companies that have followed us since then. And we're pleased to see that they're all looking at the same things that, presumably the same things that we are. First of all, our chartering strategy allows us to provide consistent profitability and consistent earnings. How do we do that? We can long-term charter vessels out at the top of the market in sectors where that is something that where we have high rates. That allows us to play the market on ships that aren't doing well. So if, for instance, the dry bulk could be a little bit better than it has been. It took a reasonable sharp upturn over the end of the year, but we have decided that we have over half of our ships open spot for the rest of the year because we want to see an upturn in it. Same thing with VLCCs. Over the past several quarters, what that means is that we've had relatively consistent time charter equivalent earnings. There's been not much variability, and the profitability has continued to be there. Second, we're able to access cyclical opportunities, which we believe leads to better capital allocation. The best time to buy a ship is when there's a distressed opportunity. Usually when that happens, you don't have the cash to be able to do so. Because we have a diverse portfolio, we have profits from a variety of other sectors. So when one market is down, we can apply that cash to buy vessels in sectors that are not doing as well. We can also sell at the top of the market. We've done that recently with some of our tanker sales, and we can set up an orderly fleet renewal. One of the reasons for fleet renewal is, as the conference has been about, is the green aspect of it. As we get new ships, they are more efficient, they're less carbon intensive, and we're in the process of completing our renewal that way. Last but not least, we're able to counter individual segment volatility, which leads us to a stronger balance sheet. What does that mean? Most shipping companies trade at a price to net asset value below 1, which is, to my way of thinking, a travesty. They don't value the value of the company any more than, or less than the actual value of the assets. One of the problems with that is obviously the price we can't control, but the net asset value is volatile. If you're in one sector, the volatility is magnified by what the market says the ships are worth. If you have several different types of ships, the volatility becomes less. And as a result, what we've seen over the last several quarters is that our partners' capital, which is effectively equity, has increased steadily, in spite of the fact that we've had several strange events, black swan events, wars and sanctions and so on. This is definitely a work in progress, and we're going to continue doing what we're doing and operating as efficiently as we can.
Here I go. Fred, when I was a kid, and we used to walk miles to school through, piles of snow, there were a lot of diversified shipping companies out there. Over the years, that model sort of sunset, and now it's coming back in. What's different this time?
I think you're right. I grew up in a position where I've worked for a lot of ship owners. They have been, in the past, diversified through some other means. And the other means is they own property, they own farms, they own fish farms, they own a variety of things. I think this is coming full circle. The issue seems to have been what works on Wall Street is that you want single-purpose companies. And the single-purpose companies are things that investors can analyze much easier. I will say that I've heard from a lot of analysts that analyzing something that has more than one market in it is rather difficult for them to handle.
Yeah, that's a good segue to a question for Hamish. Doubling down on the pure play with the recent acquisition by Starbulk of Eagle Bulk, merger, NAV to NAV merger, with a pro forma market cap of over 2.1 billion. First, congratulations on that event. And I was wondering if you could give us a post-merger kind of breakdown analysis and build on the theme of pure play.
Sure. Well, first of all, it's a little early for congratulations. We have a signed agreement subject to a shareholder vote, and we have to win that shareholder vote, and both we and Eagle are doing everything in our power to make that happen. Eagle is a great company. Star is a great company. We hope to combine the best of both companies. Look, I think Fred said the truth, which is investors' time is important. And, the problem with shipping stocks in the public market is that the people with money don't have enough time to make such a small investment. If you've got $100 billion under management and you want to limit yourself to 200 positions in the fund, these are sort of reasonable numbers, then, each position has to average, $500 million. And if you invested $500 million in Star, you'd have a quarter of the company, which isn't very convenient because then you're an affiliate and you can't just sell your position in the market. So, no shipping company is big enough. It's not worth the investor's time to analyze these companies. We have to get bigger, but if we go outside our core competence of dry bulk, not only does it become harder for us to manage, but it's much harder for the analysts and the investors to analyze. And, at some point, if it's too much time, they won't do it. They'll go to something that takes them less time. No dry bulk company trades above net asset value, which is as Fred said, sort of crazy. But I believe the problem is that the dry bulk companies are not big enough. If we get big enough, then an investor can make a larger investment, and that becomes worth spending more time on. So, let's hope it works.
Continuing on the theme of public companies, Mark, Pangaea is a little bit of a different company. It's got I think it has the word logistics and the word solutions in the name. Maybe you want to talk a little bit about the structure of your company and some of the broader logistics aspects and the specialty trade versus general trade.
Yeah, as a $400 million market cap company competing for capital against a $2 billion market cap company, we've got to do something different. We've got to outperform, which we do, and we've got to do something a little different. And that takes a little bit of explaining to analysts, and it's a good thing for us because it increases our margins, it increases our exposure, gives us more. As we move away from the ship's rail and onto land, we get access to more information, more cargo. We understand our customers' business more, so we can get more ocean transportation and provide them with, hopefully, a more efficient model at the end of the day. We can add efficiencies in stevedoring and terminaling as well as ocean transportation. So we try to differentiate ourselves in those ways and participating in things like in niche businesses like ice-class ships, where we can get 10-year contracts and we can build ships against those contracts and get additional margin more than the BDI or market would ordinarily give us for standard ships.
Arthur, I'm going to turn to you now with, versus the public markets. Where do you see, or what have you been advised? I mean, the recent activity is with Apollo kind of getting interested again in shipping. Where's private equity now looking in the shipping market?
I would say income. That's the topic that we talk about all the time, is predictable income. Using Apollo as a reference, They are the equity sponsor for Energos Infrastructure, and the mandate for Apollo's Capital has moved away from risk and more towards income-oriented. They're more of a pension fund manager than they are a private equity shop as we know them from 20 years ago. So how do you provide that kind of income orientation in the shipping space? It is long-term contract based. So what we do is more of terminal management than it is pure play shipping, as we've been discussing. So Energos Infrastructure owns LNG marine infrastructure, meaning vessels that, yes, they can store and trade LNG, but we can also provide the critical importation subject of regasification. So as many people probably already know in this room, but LNG starts out as a gas, it is liquefied, and to get it to international markets, it is carried on ships, but for it to be used for its intended purpose, which is generally energy production, it needs to be regasified. And there are two ways that a country that's importing can do that. They can build their own infrastructure, land-based infrastructure that does the regasification, or they can hire Energos Infrastructure, who has vessels that not only can store the vessels, and we receive it from trading LNGC carriers, but we also can regasify it. So we have the equipment on board to do all of it, kind of a one-stop shop, plug and play, to use those terms, where the government doesn't have to go through the exercise, capital exercise, approvals, permitting, and it becomes a long-term asset for them. They can hire us for 1, 5, 10, hopefully 25 years, and always have the option and flexibility to change that if it doesn't work for their power grid. So that's how we decided that we wanted to address the income part of shipping. But also, when we hear the terms energy transition, that was also a core part of the theme. Listening to the State Department speak earlier about the long-term supply of LNG, primarily growing in the U.S., we could see that LNG was certainly going to be a part of the future energy pie, and we wanted to be involved in that. It is part of the overall contribution to decarbonization. We can classify LNG however we want, but it is less of a carbon intensity than crude oil. So that was part of our play as well, to work within the potential to provide a decarbonization element to different countries. Historically, LNG has traded below pricing of crude oil and other oils, so that in many places where we have vessels, there is an economic benefit for the LNG to be installed in those economies. So that was the original intent: energy transition and income. But the really holy grail, if I could use that term, was the development of the European situation and their shortage of LNG when Russia was cut off. So Energos Infrastructure is a new company. We only formed in 2022. But the thesis and the diligence began in January, before any of the Russian invasion of Ukraine. So energy security was not really part of the main theme of that capital investment. And as we saw through 2022, that completely changed. And now we have the good benefit of those, not only energy transition, but also energy security. And that's not being moderated at all. It's becoming much more intense. We're seeing increased interest from not only other European countries, but even throughout the world. Every nation is rethinking security of their energy supply. They're looking to diversify, and LNG is a great opportunity to do so. So it's been a pretty good 18 months since we started the company, and it's been even better than we thought when we started.
And that's a good segue, because I was going to ask you specifically about the Russia-Ukraine and the implications of that on the demand curve for LNG. But I can open it up more broadly to the panel. It seems that the words black swan have come up so many times that we would think the world is populated mostly with black swans and not white swans. But the black swan event of the Russian invasion, how has that affected each of your respective businesses?
Well, when Russia invaded Ukraine, obviously grain supplies from Ukraine shut down almost immediately. And in fact, we had 3 ships trapped in Ukrainian ports. 2 of them got out. I think one of them is still in Mykolaiv. I think our insurance company is dealing with it or has dealt with it. Crews were fine. As the previous panel stated, volumes from Ukraine are back up. Volumes from Russia are back up. So that supply of grain is moving again, and it doesn't have much net effect.
My first experience with a black swan in this business was that we had I was involved in buying a company, and we had a ship in the in the Valdez to California crude oil trade, and soon after we bought the company, the Exxon Valdez hit the rocks, and that was a huge black swan for the entire industry. Took us years, decades to recover from that. Hopefully these other things that we're currently involved in won't last that long, and won't have such profound changes that are necessary in the way we do our business. But we have, through the years, always have had black swans. You thought they were unusual, but they're not. They happen all the time. It's the nature of the business. Things happen around the world that impact the maritime business, and impact us, impact our crews, and impact our investors, for good and bad.
Let me add a couple things. One is, Clay, to your point and Hamish's point, Ukraine shipped over 4 million tons of grain in January. That's about equal to what they shipped prior to the invasion. So one of the reasons they did that was they were able to keep the Russian warships away from them with the drones and attacking Crimea and Novorossiysk. They have enabled a corridor. They continue to export, and I think the world is helped by it. Slava Ukraini. On the oil side, we have had I don't know if you call it a black swan event or a white swan event. I mean, it has been marvelous for rates, particularly for the product tankers and for the Afras and Suezmaxes. Russia's energy supplies have gone in different directions. They used to go all to Europe. Now they're going much further out to India and into China, places that will take them sometimes under the caps, sometimes over the cap. The rest of the oil that was moved, particularly into Europe, is now moving in different directions. It's coming from the Arabian Gulf or the U.S. into Europe, much longer ton miles, and we don't expect that to change for quite some time until Russia gets out of Ukraine, and even after that, I don't think people would trust Russian-sourced crude. All the rice bowls have been set up so that the trade is going in particular directions these days, and people are reluctant to change it unless there's some really good reason to do so.
Shifting from global macro to the theme of today's overall conference, which is on climate. I was wondering, we've heard from a number of panels about the slate of regulations that are currently in effect, unrolling now in the EU, the ETS system, which is now coming on board. And I wanted to take your temperature on a kind of a 3-pronged question with just broadly, or specifically with respect to ETS. What do you think the overall efficacy of these type of regulations will have on the actual reduction on greenhouse gas emissions? Who do you think will bear the cost? Because I don't think it's going to be us on the panel, but let me know. And I guess one thing that is often overlooked is the administrability of these regimes, and how much that increases your costs, and what type of resources you have to put into compliance and understanding the new regulatory regimes. You can start with Hamish.
Okay, well, so the European ETS is definitely going to increase the fuel efficiency and reduce the carbon emissions of ships that go to the European Union. But if we're trading to the European Union and we have a fleet, we're going to take the better ships on our fleet and take them to the European Union. We're going to take the other ships and send them somewhere else. So it doesn't necessarily have an immediate impact on the fuel efficiency of the fleet as a whole. It also changes our chartering strategy a bit, because if we're taking something to the European Union, we'll want our trip to be as short as possible leaving the European Union. So we'll want our load port to be close to the European Union, because we have to pay allowances on the trip out of the European Union. Who will pay? I mean, the European Union customers will pay. What was the other? Administrability. Oh yeah, administrability. So the original rules were horrifying, and it looked as though Star Bulk might have 27 different governments to have to report to, because every ship is held in a separate single ship owning subsidiary, which is typical for the shipping industry. And the ETS rules looked at the single ship owning subsidiaries as being the administrative entities. And there was a crazy method for figuring out which country each company would have to report to. As it happens, they've taken the whole Star fleet and we're reporting to Greece, which is just perfect. So they've done a much better job than they threatened to do. So I think it will be administrable.
In terms of efficacy, I think it will be somewhat effective, but nowhere near what it was planned to be, and won't until there's more of a worldwide presence of similar regulations, my opinion. In terms of the cost, so far in 35 days or so, we haven't had any complaints from any of our charterers who've had to sign up to supply us with either the funds or the credits at some future point. Now, future point, maybe they'll be a little more upset when we send them the bill. I don't know. In terms of administration, it's an accounting and potentially a credit risk nightmare. So if you haven't come to grips with your ETS situation, I advise you don't delay, because it ain't going to go away.
As both Mark and Hamish have said, we view this as just a course of business. It's evolved from CII, so it's like a subset of CII. We're already accounting for that. As on a time charter basis, we're putting all the risk on the charterers to provide us with all the allowances that come with the voyages that they instruct us to do. On a voyage charter basis, we have to watch out, because the cost of the allowances must be figured into the freight rate that we give to a potential charterer. When it comes to enforcement administration, it's essentially the same as calculating, the bunker ROB at the end of a charter. You still have a negotiation, or late time at the end of a voyage charter. You still have a negotiation, you come to an agreement, and you provide allowances back and forth between the parties. We don't see it as being something that is a big problem. As Mark said, we also believe that you want to make sure that you fix with somebody that has the ability to provide you with these allowances. So a credit risk profile review is in order.
The objective to affect change takes hard decisions sometimes, and in some ways I applaud the EU for taking a step that's a difficult one. It will be expensive. I like Hamish's conclusion that the customers in the EU will end up paying for it. And thankfully for the ship owners, that is the way it will go. It won't really be a ship owner's cost. And it's not an easy thing, but just like many other regulations that come through in different parts of the world, you just have to manage it. And for the ship owners themselves, I mean, it is going to be managed administratively through the ship management firms. So the independent ship management companies will have a gigantic burden. So it's not easy for those entities that will be managing large fleets, and I'm sure even for Hamish's team, it will not be very easy to manage. But you just have to deal with it and roll with it, because if you believe in the objective, it's one of the things that you just absorb and you move on.
And you know, as Art was saying, it is going to be a big job for our team. This is another reason why, you know, big shipping companies are going to be better placed to deal with the coming sets of, you know, regulation after regulation. If we have an emissions trading scheme, you know, in every area of the globe, it's going to be a big administrative burden. You need.
Is that why you bought Eagle, to have resources to manage the ETS?
Absolutely.
That's a good idea. Works.
One question along the environmental lines again. The green fuels are seen as sometimes as a path to decarbonization, and I'm told by my technical director that recent studies show hydrogen can be a more potent indirect greenhouse gas than previously thought. Some calculations 200 times worse than CO2. I'm taking it from my technical director. Given that green fuels such as ammonia and methanol are made from hydrogen, how do you think these fuels will be viable from an environmental view? Do you have a view on green fuels?
Well, ammonia is pretty toxic, but you know, I think the world is going to have to figure out how to use it. Because I think that most of the other alternatives are very difficult to make.
In terms of the impact of hydrogen, I turn it over to Hamish.
And I don't know.
That makes my job easier. Whatever fuel you're using something that's a hydrogen carrier. Either it's hydrogen or ammonia, or it's methanol, or fossil fuel, or LNG. So there's a whole bunch of issues with each one of them. None of which I think anybody here can solve today. One of which is the actual production of them. If you produce too much methanol, have you used corn? And is there then enough fertilizer and a variety of other feedstocks to be able to continue to feed the people? Same with ammonia, because ammonia is a big fertilizer component. So and the technical issues on the engines are still being worked through. I don't see those being solved anytime soon. I mean, this is as momentous as the change from sail to steam. I don't think this will take 5 minutes. It will happen. I hope it will happen as soon as possible. I hope there's more invested into it to make these different types of fuels and different types of engines happen more quickly. But this is not an easy problem to solve.
I'll just add in that I agree that ammonia seems to be the most probable, even though not an easy accomplishment at all. Hydrogen is, the capacity requirements for using hydrogen as a marine fuel are just too difficult. But the conversations in all of these categories do need to be continued, because there is progress that comes from it, even though it seems insurmountable. There are things learned where things can be improved along the way, and we're already seeing that with some of the short sea shipping in Scandinavia and in Europe. So all of that is progress. LNG bunkering also, and of course we're in the LNG business now, so we like everything to default back to LNG. But I see it as incremental improvements. It's great to have objectives of carbon-free shipping in a short period of time, but the world does need to continue. And how do you do that? You need energy sources in scale. That's why we chose LNG as a transition for decarbonization. But my bet would be on ammonia for scale in the future.
And I have to say, I think in 50 years there will be nuclear-powered ships, but I think a generation has to die off to make them politically acceptable.
We can open it up if there's any questions from the audience. We have time for maybe one, maybe two. Pass the mics.
Maybe sticking with the decarbonization theme to some degree. A few years ago, no one even cared, thought it's not happening anytime soon. Now we're moving in a different direction. But for now, it seems like everyone's just slapping a dash ready notation or slapping a tank on top and just taking whatever design a shipyard might throw at them. Are we missing an opportunity to, one, retrofit the existing fleet more? And two, when we are looking at retrofit, or sorry, at the new builds, looking at them in a more holistic way, where we're talking about other solutions around the ship beyond just new fuel on top, working closer with the shipyard, working closer with your charter counterparties here, and changing the way we think of placing new orders.
I mean, from my point of view, the problem is that the technology is really not mature. And, you know, building a ship, a fuel oil ship, you emit 8 times as much carbon as it takes to run that ship during the year. So if you build a ship that is not optimum, you know, you're soaking up you're emitting a lot of carbon by building that ship, and if it's not a great ship, you know, maybe it's not a good decision. You might be better off operating an old fuel inefficient ship, actually.
Also, there's the cost of being, you know, first mover in the space.
Well, I was getting at it from the point of view of the globe.
Yeah.
But if you do want to build a custom ship to your design, at the end of the day, that ship has to be economically competitive. I think that's what we're trying to say. So until an acceptable technology is in place that's well accepted, proven, and there is fuel available, we've got to get there somehow. And I'm not sure if any company on this dais will be the leader in terms of inventing that ship, but I think we'll all be close followers.
We are out of time, but I'd like to thank the panelists for their time, and we can continue with Brian.